investing is the best way to build wealth over the long term. While there are numerous types of investments, they generally fall into several major categories, each with its own level of risk and potential return. Some of the more common and notable types include real estate, stocks, bonds, mutual funds, ETFs, business ownership, intellectual property, precious metals and gemstones, cryptocurrencies, commodities, art and collectibles, and your own human capital. Each type of asset has the potential to increase in value or provide income, but they also come with varying levels of risk and require different levels of knowledge and effort to manage effectively. It's important to understand that investing always comes with risk, including the risk of loss. Before investing in any asset, it's crucial to thoroughly research the investment, understand the risks involved, and consider how it fits into your overall financial plan. Again, this information is not financial advice, and professional guidance should be sought where necessary. Always ensure you are making informed decisions that align with your personal financial goals and risk tolerance. Disclaimer: the following information is intended to be a general guide to assets that have the potential to increase your wealth. It's not intended as financial advice and should not be relied upon as such. It's important that you do your own research and consider seeking advice from a certified financial advisor before making any investment decisions. However, always remember that investment decisions should be based on careful research, and it's wise to consult with a financial advisor for personalized advice. Now, let's dive into the details of these assets. 1. Real estate. This can range from residential property, houses, apartments, to commercial property, offices, factories, retail spaces, to real estate investment trusts, REITs. Owning rental property can generate a steady income stream from rent, while property values often appreciate over time, leading to capital gains. Commercial property and REITs may have their own unique advantages, such as higher rent rates and the ability to invest indirectly in real estate respectively. 2. Stocks. Owning stock equates to owning a small fraction of a company. As the company's value increases, so does the value of the stock. Additionally, some stocks pay dividends, which are portions of the company's profits distributed to shareholders. Careful analysis and strategy, whether that be a long-term growth focus or a shorter-term trading approach, are required to succeed in the stock market. 3. Bonds. Buying a bond means lending money to a company or government entity. They pay you interest over a set period and return the initial amount, principal, at the end of the bond's life, maturity date. Bonds are seen as less risky than stocks, but also typically have lower returns. 4. Mutual funds. These are funds managed by professionals that pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. This provides a way for individuals to own a diversified portfolio without having to buy all the individual assets themselves. They often have a particular strategy or focus, like a sector or risk level. 5. ETFs. Exchange-traded funds are like mutual funds, but are traded on stock exchanges like individual stocks. This provides the advantage of intraday trading flexibility and typically lower fees compared to mutual funds. 6. Business ownership. Starting or buying into a successful business can yield significant returns. This could be a small local business, a franchise, or a larger operation. However, running a business requires a significant time commitment and a diverse set of skills. 7. Intellectual property. Ownership of patents, trademarks, and copyrights can generate income through licensing and royalties. Writing a successful book, inventing a popular product, or creating a hit song are examples, but it's often hard to predict what will be successful. 8. Precious metals and gemstones. Assets like gold, silver, diamonds, and platinum have historically been used as a store of value and can be a good hedge against inflation. However, They do not generate income like stocks or real estate. 9. Cryptocurrencies. Digital currencies like Bitcoin, Ethereum, and many others have grown significantly in recent years. They offer high potential returns, but are also very volatile and risky. Their future is uncertain, and they are best suited to investors who understand the technology and are willing to take on significant risk. 10. Commodities. These are raw materials like oil, gas, coffee, wheat, etc. They can be a hedge against inflation and are influenced by global economic and political events. Direct investment is usually through futures contracts, but there are also commodity-focused ETFs and mutual funds. 11. Art and collectibles. Artwork, vintage cars, rare coins, and other collectibles can appreciate in value over time, especially if they are rare or unique. These markets can be difficult to predict and are often driven by trends and personal tastes. 12. Human capital. This is your personal knowledge, skills, and experiences. Earning a degree, obtaining certifications, or learning a high-demand skill can significantly increase your earning potential. Additionally, your network of relationships can be a valuable asset in many professions. Investing in any asset class requires careful research and due consideration of your own financial goals and risk tolerance. It's recommended to consult with a financial advisor to get tailored advice. In conclusion, wealth generation is a process that requires careful planning, diversification, and a good understanding of different asset classes. However, each comes with its own risks, challenges, and rewards. It's important to remember that an asset that might be right for one person might not be right for another, due to differences in risk tolerance, financial goals, and personal interests. Investing wisely requires careful study, a clear understanding of your financial goals, and often, guidance from financial advisors. Building wealth is not just about increasing income, but also about strategic accumulation and management of assets. Remember, the path to wealth doesn't always have to be traditional. Creative ventures, like generating intellectual property or enhancing your human capital, can often be just as rewarding. Your journey to wealth and financial security is a personal one, and with the right mix of assets, it can be a rewarding journey indeed. I hope you have learnt something valuable from this video. Please don't forget to like, subscribe, and hit the bell icon, so you don't miss any future content about money-related stuff again. Goodbye.